Okay, welcome to Borak Bursa. We're having a special edition today where we talk about everything about everyday Malaysian finances. The special edition is about, if you have not heard already, Trump's tariffs or Liberation Day. So we have here Chuck on my left, who is representing the average person. Let's kick it off.
Yeah, I think there's already a difference with the average person and us, because when we saw this news yesterday, we knew like it's a pretty big move for the whole world. Like, you know, the world is gonna feel some stuff, right?
Yeah.
So Trump didn't just tariff Malaysia; he tariffed the whole world. Effectively, every single country out there has a baseline 10%.
Yep.
And then some countries have more, like us. 24%.
24%, yeah.
And there's some as high as Vietnam at 47%.
I think Laos was like 67 or something. Some crazy number.
Yeah. So like, why is Trump doing this?
Okay. I think let's kind of start off where like, you know, I think this goes back almost 30 years. So, you know, the whole term, you know, in the last 30, 40 years, we hear a lot about globalization.
Yep.
Globalization essentially means that the rich countries or the high-income countries focuses on high-value items, and the rest of the world, where labor is cheaper, that you would focus on lower-value items.
Is that what globalization means? I always thought it meant like, oh, everyone gets better and richer, and everyone gets happier, and
well, not really. I mean, and that's why there was a big push in the last 40 years that there's really no manufacturing done or very little manufacturing done in the US today, because that was a policy push, right?
Interesting. So this definition of globalization comes from?
It was coined by, well, let me Google it, but I think it was coined by
an economist.
He wrote a book or something, and
with that definition, that low cost.
Basically, it would be globalization means that you would go to the most efficient producer. Right?
Okay.
That means you take the path of least resistance.
Yeah.
Right? So imagine manufacturing socks in the US versus somewhere like Vietnam. Like, who's going to have a better costing structure? Who will be more efficient?
Right.
Right?
And because of that, there is a perception that America is losing jobs overseas.
Oh, I think it's like kind of beyond perception, because where Trump won mostly in the last election and in 2016 was what they call the Rust Belt, right? That's the reason why they call it Rust Belt, because that's where all the factories used to be, and they're not creating jobs anymore, right? And if you look at the high concentration of jobs that have been created in the last 30, 40 years were high value jobs, right? Like your data scientists, your tech guys, right? People who are in that service space, finance, for example. But, you know, the average person, that doesn't constitute everybody in the US, right?
But I mean, overall jobs, unemployment in the US has not been like at staggeringly high levels.
I mean, with Doge, like we've seen with Doge, what's happening.
Doge, the agency, not Doge, the coin.
Oh, yeah. The Department of Government Efficiency, right? Yeah. You can see that the government has been trying to mop up some of that excess unemployment by just creating employment as a civil service.
Okay.
Yeah, which is common across most countries, Malaysia included.
Right.
Excuse me.
So you're saying that the previous administrations created civil jobs to tidy up the unemployment created by moving manufacturing overseas? Yeah,
I mean, the move of manufacturing has like every year it's a decline, right, in the US in the last 40 years. I mean, just to give you an example, there was an article that was published that talked about before this huge tariff announcement, there was an announcement on steel and aluminum imports.
Yeah.
Right? 25%. And the last aluminum plant that was built in the US was 40 years ago.
Right.
So there have been no new investment in capacity in this specific industry in the last 4 years. So kind of, like, why would you manufacture maybe socks or shoes or clothes, what they determine low value in the US? Because it's just going to raise costs up quite significantly.
Okay, so let me try to unpackage this. So essentially, for the past 40 years, globalization has led to manufacturing moving to the path of least resistance, which is the cheapest place to manufacture, which is often, let's say Southeast Asia, Asia, and these kind of places. So they move their factories over there because it's cheaper.
Mexico also.
Mexico.
Yeah.
But now what Trump is trying to do is to reverse that by charging tariffs on these countries, so then they no longer become as cost efficient as they used to be, and hopefully move those jobs back to the US.
That's essentially what he's saying. That's a theory.
And the problem with this, partially at least from my understanding, is that tariffs are a war, right? So you tariff me, I will tariff you back. That's almost SOP for most countries.
Well, if I put it maybe in a Malaysian context,
Okay.
we're all very used to a tariff, especially for most urbanites or every Malaysian. If you have bought a car in Malaysia today, you understand tariffs.
Yep.
If you, 20, 30 years ago, before this CKD kind of setup came in, it's either Proton, which was excise duty, tax-free, everything is tax-free, right? Or Produa, right, which got the tax-free status. And you buy an imported vehicle, and an imported vehicle is a lot more expensive.
Yeah.
Because tariffs on that is 200%, say for example. So what happens is that when you enact tariffs that are industry specific, so in the case of Malaysia, 43 years ago, 45 years ago, that's where Proton was founded. The then Prime Minister, Tun Mahathir, wanted to build a car industry.
Yeah.
Right? So
it was a protectionist tariff.
Absolutely protectionist, right? So these tariffs today are protectionist in nature.
Okay.
So whether they start a war or not, that will be very much dependent on the country. Yesterday our foreign ministry has come out and said that there will not be any retaliatory tariffs against the US. Okay. So they already said that no, we're not gonna. We'll take it as it is. So. Of course, China, on the other hand, has said that we're gonna, this does not work because some of the tariffs on top of previous tariffs on in addition to the new tariffs that have been included. Like for example, glove stocks could be as high as gloves. For example, medical gloves could be as high as 100%.
Yeah.
So
we'll talk about why that is later.
It's very much deglobalization. That means what the US is saying that, this whole 40-year thing is not working anymore. Let's deglobalize. Let's bring back manufacturing in-house in our country, and how he's gonna spur that investment or people to start building and start investing in the US and build factories and create those jobs, and also for national security, right? So that they're a bit more self-dependent or self-reliant, right?
Yeah.
Is that, okay, here's a huge tariff here. Now here's your chance to be competitive and serve the local market. So
the funny thing is that this is meant to bolster up US companies in a way.
Yeah.
But, the stock market didn't quite reflect that yesterday, right? It was...
Well, stock market is, some people are,
bloodbath, really.
Bloodbath, it was 6 months, you kind of priced in forward, right? So everyone's expecting businesses to do worse. And, stocks don't get it right all the time in the short term.
Okay.
Right, because it's very sentiment driven.
So you think this will be overall better for the US market?
I think this... Globally, I think it's gonna upend a lot of things.
But upend is short term, right?
Upend definitely short term, but I think maybe the short to medium term, companies will need to adjust. Will need time to adjust. That's assuming Trump doesn't go back on the tariffs,
which we'll also talk about.
Which we'll talk about later. So we don't know, right? So as a business owner today, you're saying, hey, you know what? Let's wait and see because tomorrow. Because if I invest a plant, it's going to take 2 or 3 years to build, and then
right. So infrastructure investments are going to have to be very, very tentative and pensive for the next few years because you're not sure what this guy is going to do.
Correct. And when you hold back investments, which is part of growth, right?
Yeah.
Then that's where your profit numbers and all that is going to be affected.
Okay, so stock market deals with uncertainty in a very typical fashion. Everything will move to gold, right?
Gold, maybe Bitcoin.
Yeah, okay, maybe Bitcoin, but so far not yet.
Yeah.
But let's talk about what we do know. So we do know that US is a significant. Okay, sorry. What we do know first is where we sit on this tariff list. Okay, so as we said, every country in the world has minimum 10% tariff.
Yeah.
Right? And Malaysia, I think some news agencies reported it was number 11 on the list. Yes, we are numerically number 11 on the list, but in terms of how high we are in terms of our tariff, we are not number 11. We're actually quite far down. I think we're number 39 or number 40 or something like that.
I think I read some was like 15, they put in 15 because they just count.
15, right?
Yeah.
But it didn't seem to reflect in the list. I think there were a lot of questions about this. So this is a full list of all the tariffs that were implemented. And then someone noticed that the tariffs charged to the US, half of that was what the US decided to charge back to the country.
Yep.
Rounded up.
Yep.
Right? We'll go into that calculation later. Let's look at how much this affects Malaysia first of all. So based on this chart by WTO, US is actually quite a significant trading partner with Malaysia. Third highest, almost on par with China in 2022. It's funny because as a consumer, I don't see that much things that I buy from US versus from China. Nowadays, like we're on Lazada, we're on Shopee, we're buying a million things from China.
Yeah.
But we don't seem to be buying that many US-based things. Maybe I buy an Apple or I watch The Avengers. That's like a movie. Like where is all this trade coming from?
Okay, so if we kind of look at trade, here we have breakdown agriculture and non-agriculture products. But if we kind of look at a much broader base, so trade is goods, physical goods.
Yep.
Right. And service and investment revenue, right? So one is service based, which is intangible, you can't touch.
Yeah.
And one is physical item, right? So if you look at US, they still dominate quite a fair bit. For Malaysians, we use American products every single day. Even if you don't use an iPhone, you use Google to search. You use Google to search. You use Facebook to post whatever. You use WhatsApp every single day, which is also owned by Facebook. You may use Instagram, which is also coincidentally owned by Facebook as well. So I think on that service front, like we may not see those physical goods, which comes back to our point earlier where, US has, that policy push is to go into higher value items, right? And actually we consume quite a bit of US type services, right? For example, like, for us, businesses, for example, we are, we have to pay Google every month. So that's technically an import.
Yeah.
Even though it's done on the internet, right? So I think a lot of these services are not seen. And also I think the other part where we split into goods, one of our largest exports, so if you look at OECD map on Malaysia's exports, right? The largest part is E&E. Electrical and electronics.
Okay.
So, a subset of that would be semiconductors.
Yeah.
Right. So our export value on that specific sector, if you combine oil and gas and palm oil, which is a very big Malaysian export, E&E is still bigger than that.
Yeah.
Double. So if you add oil and gas exports and palm oil, you add them together, E&E is still bigger than that if they're combined. So it's huge, right? But of course, where do we kind of sit in that value chain? Essentially, we are somewhat service-based, not as manufacturing-based as, of course, there's manufacturing involved, but it's service. So essentially, a lot of the semiconductor companies, I won't say all of them, but most of them would be, say, importing semi-finished products, right? Build them and service them, and then follow on to the next part of that supply chain.
Okay, so let me see if I follow you here.
Yeah.
E&E is bigger than palm oil and oil,
combined.
but it's not pure because we are also paying for some of the goods to import in first,
right?
And then we're exporting them out at whatever actual value, right?
Correct.
So let's say we import, let's say for easy to understand, an incomplete iPhone for 5 ringgit, and then not 5 ringgit lah, okay, 500 ringgit lah, okay, 500 ringgit,
Yeah.
and then we export it back for 700 ringgit.
Maybe actually probably more like 550
50 ringgit.
ringgit.
So essentially, all we've made is 50 ringgit, but then on our charts to show exports, it will show 550 ringgit.
Correct. Exactly.
Right.
So that's why it looks so big.
Right.
You know, so the accretive value is
Not that high lah. I mean, it's significant.
it's significant.
Yeah.
But it's not as high as pure numbers would dictate it to be so.
So if we did like the margin of return,
Yeah.
it would not be close to oil or palm oil lah.
Probably not, no.
Okay.
Yeah.
That's interesting.
Yeah, probably not.
Right. But all that gets calculated in our import amounts and our export.
Yeah, because it's an aggregate value, right? So
Right.
you have to go down to the business. So, you know, like yesterday's, so we've been getting a lot of questions, but yesterday's announcement, you know, some of the stocks in our portfolio went up,
Yeah.
right? And I think it has to be very company specific, whether they actually are imported, whether they are affected or not.
Yeah.
Actually, some have been affected positively.
Yeah.
Some negative. So it very much depends on the specific business itself. So we can't be like, you know, put a blanket and say, yeah, it's all going to be bad.
Can you give me an example of a positive and an example of a negative?
Okay. So if say you okay, so maybe an earlier slide before that. So one of the things that we've dominated for a long time now, up to the pandemic, was actually gloves. Malaysia,
Yep.
largest exporter of gloves, right?
Yeah.
Not Thailand, but Malaysia, right?
Yeah.
And so we have a lot of Malaysian listed, you know, glove stocks,
companies, yeah.
medical glove stocks, right? So it's nitrile and also latex as well. So come the pandemic 2020, and there was a shortage of gloves, right? And China then decided, oh no, you know, it's become national security that, you know, we need to produce our own gloves as well. So before that, they produced very little of that.
Oh, okay.
And also because if you look at global sales of gloves, they're not that significant. You know, it's maybe $5-6 billion US,
Okay.
global, right? So they didn't quite think much of it, but now it became a, you know, national security issue. So they then went crazy, and, you know, if you trust Chinese efficiency, you know, they can build a hospital in 10 days, that kind of thing. So they've kind of flooded the whole world post that with a lot of gloves, a lot of supply. And that's why you see post-pandemic, there's been oversupply. And of course, the non-efficient players has been forced to shut down.
Right.
But of course, China works on a different economics model, because if they deem it to be national security, then, you know, government then supports it, right?
Yeah.
So I guess the issue of US blaming China of dumping, that means selling below cost, is not untrue.
Yeah.
Right. So we know that. So what happens is that now with the increase of tariffs from Chinese made products, you know, it's a blanket thing, and even we get hit with 24%. The gap between buying a tariff on a gap between buying a Chinese glove and a Malaysian made glove, the gap can be up to 80%. So that's quite significant. So in a way, our local glove manufacturers are saying yay, right? Because one of their biggest exports is actually to the US and European nations as well.
So I think what we're trying to say here is that because everyone got tariffed, we are a middle of the road tariff lah.
Yeah.
24% versus how much is China again?
Well, I think if you add in, I think it's almost 70-80%, right?
Right.
Yeah.
So then suddenly China's gloves look a lot more expensive than ours. Even though ours are more expensive now, theirs are even more expensive.
Correct.
Yeah.
So, yeah.
And so our glove companies would be perceived to be doing well in the future.
All right. Well, because then the orders that come in from the US
Yeah.
would pick something that's lower tariffed, right?
What about the E&E stuff?
I think the E&E stuff, some of them might be affected
Negatively.
negatively, some of them. I mean, if you are purely manufacturing here and then going direct to the US, of course, you'll be impacted to a certain extent.
Yeah.
Now, but I think the impact is more, not so much that they won't buy from us.
Yeah.
I think the impact is the cost of it has gone up. right? And unfortunately for American consumers, things have just gotten really expensive overnight.
And it will get even more expensive after this, right?
It will get more expensive overnight. Why? Because you see, like you would put in a tariff. If I was government today, I would put in a tariff. If say I'm trying to build a industry,
like cars,
right?
Yeah.
Or I have a substitute product, so that my electorate won't get so if they put a high tax on salmon and we import it from
EV, let's say EV,
right? Yeah, exactly, right.
Yeah.
If we have an alternative product, or substitute, I think things are still okay. Unfortunately, when you put a blanket tariff like this,
no substitutes.
Well, I don't who's manufacturing. I mean, I always talk about socks, but because it's such a low value item, I mean, who does that in the US today? I don't know, right? So regardless, you still got to import them, right?
Yeah.
And it'll take time to build these industries.
And it'll take certainty as well, because someone wouldn't want to set up a sock factory in the US and then suddenly the tariffs get reversed.
Yeah, exactly.
And then you're stuck, holding American stocks that are,
too expensive,
five
right?
times the cost of something made in Vietnam.
Correct.
Yeah.
So I think that's where I think that more of the fear comes from is that demand will drop. Because essentially this is they calculated numbers that if all this go into effect based on previous numbers, the US government rake in about 700 billion in tariffs.
Yeah.
Right, which is significant to their revenue, right? Or their tax revenue. So basically
But that's given current demand.
Given current demand, right? So because certain things, for example, like, I don't think it's ever going to be manufactured in the US. I mean, it just does not make sense, right? Because we don't forget, I'm manufacturing right now. If I'm a manufacturer, I manufacture in China, where I have that whole ecosystem. Because it's not just the manufacturing; it's the packaging, it's the shipping, it's the logistics, it's everything else that goes around a factory, right?
Yeah.
But I get to export to the whole world.
Yeah.
China's not my only market, but if I build a factory in the US is my only market because that's where I get a competitive edge.
Yeah.
Because I won't be cheaper than, say, a Chinese producer if I was selling it to Singapore.
Yeah.
Right? If that makes sense, right? So it's a very limited market. It's 300 million people, versus we've got 7 billion people worldwide, right?
Yeah.
So of course it is a valuable market for sure because they're high income. But
I mean, that's what America's good at, right? Consuming.
yeah,
They are the biggest consumers per capita.
they are the highest GDP per capita or highest GDP in the world today.
Well, that's productive, but what about consuming, like?
Consumption, a large part of their GDP is consumption.
Yeah.
Correct.
Probably higher than most other countries.
Yeah, definitely, but on a per capita basis for sure.
Yeah.
So it's a very valuable market.
Yeah.
But is it so valuable enough that I would move my operations into the US?
Depends.
Well, numbers lah. Like it has to make as a business, it has to be sustainable, right? Yeah. So I think that's really kind of the question.
Okay. So we were also curious as to how this 47% tariff on the US came about, because I certainly don't remember there being a 47% tax on most things except maybe cars lah. And so we looked at the WTO figures, and surprisingly, fruits and vegetables are taxed pretty highly. These are not on the US specifically, these are worldwide. So basically these are things that are taxed coming into Malaysia regardless of where they come from. Tobacco, obviously, oils. And so I think we were talking offline about this, like how they came up with this percentage thing. And this guy called James Surowicki, so I hope I'm pronouncing that correctly, found out how. And basically it's an Excel sheet that
It's just drop down.
not a 5-year-old, maybe a 10-year-old or 15-year-old could have come up with lah, right?
Yeah.
So it's how much we export to the US versus how much we import to the US. Divided, that is the tariff, so-called tariff rate that they put.
Correct.
Why? How is this representative of a tariff?
So I think James put it up quietly. I mean, these are fake tariff rates, right? Of course, Trump had just called it a tariff.
Yeah.
But essentially what he's doing is looking at trade imbalances.
Yep.
That's why. I mean, tariff is probably the wrong word, and they are fake tariff rates. So we don't have a 47% tariff rate on all goods in the US.
I mean, so this is essentially why the stock market right now is so scared. It's because we have a guy in charge of one of the biggest economies in the world making world-bending changes based on high school formulas.
Oh, I don't even call it a high school formula, right? I mean, if a guy knows the numbers, I mean, it really was a spreadsheet thing, and they just put the imports and exports, the deficit, and let's just divide that by 2.
They pull that little thing in the corner of the Excel sheet and just drag all the way down.
And then either round up or round down.
Oh my god!
Yeah. You know what's interesting? The White House actually officially came up with an actual formula how they came up with it.
Right.
Of course, they made it look very complex, but essentially what James had figured out is
this lah.
It is what it is lah.
Yeah. I actually know how to make this Excel sheet. I could do it in 10 minutes.
And you're a non-economist.
Yeah.
So
I studied economics.
Oh well, okay. So yeah.
Yeah.
But I mean, I guess if we talk about this, it begs the question, right? How much thought? Because it seemed like his big plan was tariffs, and he's gonna make US great again.
Yeah.
But it doesn't seem like there was a lot of thought put into.
And that's what I'm getting at lah. Like basically, it's a very fearful time for investors simply because they don't know. These things seem to be done without much thought.
Correct.
Impact assessments and all this kind of thing.
Careless.
Yeah. So, what else is coming? And that is why the market is deciding we're not going to, invest in anything long term because the long term is so unpredictable at this point in time.
Yep.
And that's why people are pulling back from the market, pulling into like what you say, gold and Bitcoin.
Yeah.
Yeah. Okay. So this is important. I think actually, no, sorry, we discussed this already. This is more important. So I went on to X to find out what the sentiment of the average Malaysian is to this news. To be honest with you, I think most Malaysians, everyday Malaysians, probably don't know what the impact of this will be on our daily lives.
Yep.
So I thought it was important to kind of like maybe wrap our heads around that and let's talk about these comments individually, because I managed to screen cap this one comment thread that had a lot of different responses to the news. Wait, it's not updating.
Yep.
What is going on? Okay, there we go.
Right.
Okay, so the first one is from a guy called Kiddo. Basically, he says like, why is everyone so distressed? Just boycott US products lah.
Right.
So a few things to unpack here. First of all, them putting a tariff on us doesn't make us buying their stuff more expensive.
No.
Yeah, it makes them buying our stuff more expensive.
Correct.
Which means that we sell less to them.
Correct.
Yeah. And effectively, we've been boycotting a lot of stuff already lah. Right?
Well, I mean, yeah.
Not personally, but as a country, I think like...
Yeah, I mean, all the American brands were hit, yeah.
Starbucks as well, so forth. That's not really going to be affected at all by the tariffs.
No.
Yeah.
No.
Maybe, I don't know, maybe US goods might get more expensive because they have to manufacture them more in America now. Do you foresee that?
Yeah, okay, so I think, for example, I think one of the things that have already, like our car industry is, been very, very nationalistic for the last 40 years.
Yeah.
So yes, we do have tariffs against the US for car parts, example. We have it for the rest of the world as well, right? So it's not exclusive to the US, right? So I think in terms of like consumption stuff, the average Malaysian probably won't feel it as much. But where they will feel it would be businesses that directly sell on to the US.
Yeah.
Depending on the type of business, they might do better, they might do worse. Right.
So going back to that chart earlier where we said our trade with the US is on par with China, we foresee that to drop, right?
You mean the trade to the US?
Trade volume. Yeah.
We should expect that number to drop
Conversely, we should expect China to increase.
Or we may not as well. Okay, so I think this is where everyone's kind of trying to figure it out.
Yeah.
And
Yeah.
it is so complicated because so what has happened is that because of China's back in 2016 when Donald Trump imposed tariffs on China, immediately their exports took a dip. Immediately.
Okay.
Right. 5 years later, they were doing more exports than they were when the tariffs hit. Right.
How come?
Well, they find a way, right? They find a way. They still got to grow and things like that. But a lot of Chinese companies also started to offshore, right? So I'm a Chinese company, and then I go to Vietnam. I set it up. I do the exact same thing because Vietnam has no tariffs against the US, right? So they do the same thing as well. So offshoring. So we might see, I think for the positive side, we might see some offshoring coming into Malaysia.
Yeah.
Why? Because just to give it an idea, right? For example, Dyson, which is not an American company, it's actually a British company.
Yep.
They're headquartered out of Singapore.
Yep.
And it seems like an import into the US would be from the final assembly point and place of origin, right?
Yep.
So what could happen is that, which may already be doing now, is that the components are manufactured in Malaysia or Philippines, right? We're part of the supply chain. And then maybe the final assembly takes place out of Singapore and goes out to the US.
Right.
But don't forget, the rest of the world is not affected, right? We can still, whatever tariffs already remain is only with the US. It's not anywhere outside the US is in a way not affected.
Are we going to see like people just kind of like diverting their manufacturing to a country that is not as highly tariffed and then move it back to the US?
We've already seen it in 2016.
Yeah.
So again, we talk about a path of least resistance.
Yeah.
So as a business person, you would make a rational decision.
Yeah.
Right. And back in 2016, maybe the tariffs were not high enough.
Yeah.
And they figured it out. And now, Vietnam is also very high on the list.
Yeah.
When it comes to tariff, right? Super high, right? So we'll see a lot of that offshoring and moving on to other countries that a bit more favorable.
Yeah.
Yeah. So I think on the positive side, I think that Johor Special Economic Zone that was set up or was talked about like last year and was officially set up early this year, I think that would bring some benefits to Malaysia. I think more positives than negatives because
okay, talking about positives and negatives also. One guy mentioned BRICS, that we are getting this 24% tariff because of BRICS. So first of all, that's not true. We're getting it based on an Excel sheet.
It's a trade imbalance.
Yeah. Also, that kind of impacts the next comment, which is PMX step down. This is really not our PM's fault. Again, this is the fault of an Excel sheet, right? So let's talk about BRICS for a bit. So BRICS basically is an alliance of countries that have chosen to not trade, to actively trade less with the US dollar.
Well, they've not come out to say that, but I think that's been implied if you join BRICS.
Yeah.
It's actually BRICS is not like the UN or where
it's a trade organization.
It's a very loose kind of setup.
Okay.
Yeah, it's a very loose thing, and of course, I think if we kind of just read between the lines, it's like if you guys don't like the US and you think what they're doing is unfair, then let's all come together and see what we can do, right?
Okay.
I think that's what BRICS is. Of course, one of the things that has been proposed by BRICS is to not trade in US dollars.
Yeah.
And they're trying to find a solution for that, which I believe they will in due time because a lot of countries have seen how the US have weaponized the US dollar.
Yeah.
And because
it's the main trading. Yeah.
Yeah, 70-80% of the world's trade is still done in US dollar, which means when I say weaponized means that at their will they can confiscate your money and they can freeze your assets.
Yeah.
Yeah. And of course, as anybody, like you don't want be that way, right? You want a currency that is free from politics. It's not realistic. I guess the only other option right now is Bitcoin because they are absolutely neutral, right?
Yeah.
So I think that's kind of where we are. And if you look at the last 6 months, what has happened to the stock market, very, very clearly, since the yen carry trade, there's been a major sell down, especially in this year.
Yeah.
The sell down of Malaysia, not Singapore, Malaysian stocks, Indonesian stocks, and Thai stocks. A very aggressive selling specifically by foreign fund managers.
Why?
Well, if you kind of think of it, these are the 3 countries that have joined BRIC as some form or another, and a member or a partner.
Right.
So they've taken preemptive strikes to say, if you guys are against us, then they are likely going to get taxed even more. But I think that was the assumption. And, they were not wrong, but I guess fastest way, no one knew, but they were just going to use a spreadsheet of trade imbalances.
Access to that Excel sheet.
Why? Exactly.
Yeah.
Which was probably done 2 nights ago or something, right?
They probably ran quite significant projections, on like top end software.
Yeah.
And they didn't realize that you could just open Google Docs and just predict it immediately.
So it's quite clear that that's kind of what happened. So I don't know. We might see some rollback. After this announcement. So these were all preemptive sell downs because a lot of these foreign fund managers were selling at any price.
Yeah.
Yeah. So we're getting some deep value in some of these countries, but Singapore's not sold down.
Yeah.
Yeah.
So interestingly, basically people anticipated that BRICS countries will be targeted, and ironically, so far they haven't, at least not significantly, not specifically, not some sort of targeted statement saying, we're going to go after BRICS countries.
Well,
so because of that, we might see that panicked response being pulled back slightly.
Probably.
Okay.
Yeah. In fact, I mean, kudos to the Trump's team because they were very data driven.
Extremely. Very fair.
Very fair, right?
No, we have to admit, it's a very fair tariff.
It's 50%, right?
Yeah,
on trade deficit and imports, right?
Yeah,
so,
you couldn't get any fairer than that,
I mean, even 2 countries that was listed had a 10% tariff that had no population living there, right? It's just a pull down, right? Yeah.
Yeah, some of the countries I haven't even heard of before. So we already talked about the glove one.
Yeah.
So the key message is that it might have some positive effects on Malaysia. It's not all bad news. There are some stocks that are going to take a hit for sure, and also short term, there's going to be some unpredictability. So obviously that will scare people away. But long term wise, do you project an overall net slightly positive outcome for Malaysia with regards to this?
I think with yesterday's announcement, and of course we don't know if things are going to change.
Yeah.
Our government has come out and said that they're not going to do any retaliatory tariffs, right? We probably might take a very short-term hit until kind of the world figures out what they want to do.
Yes.
But net, I think it will still be a positive for Malaysia, even though we're 24, but we're still lower than Indonesia, we're still lower than Thailand.
Yeah.
Right? So we might see some trade coming back here. Actually, it would have been counterproductive, but I don't think these guys are actually going to ever set up a manufacturing plant in the US. They'll probably then move it to the next place, right? And don't forget, Malaysia has a pretty deep and entrenched manufacturing ecosystem, right? It's been built over the last 30, 40 years. So it's quite hard because it's not just, some guy supplying packaging, some guy supplying tools, but it's also about infrastructure. It's also about port facilities. It's also about skill set, right? Your population.
So I was talking to a friend about this. It's quite interesting that Malaysia is in a unique position to be manufacturing goods for Western countries simply because our level of English is actually pretty good. It's one of the best in the region, right?
Yeah.
I mean, outside of
if you go to Thailand,
Philippines or Singapore, right?
Right, so expensive there.
Yeah, so even if manufacturing is, let's say, slightly cheaper in Vietnam or Thailand, they still prefer to do it here because we can requirements gather a lot better
Yeah, I mean, so it's labor, it's people as well, right? And then if you look at Indonesia, I mean, it's a huge population, right?
Yeah.
But the roads to get to the port, that's a secondary issue, right?
Yeah.
Because they are still building out the infrastructure, right? And I think Malaysia has invested quite smartly in that infrastructure, so it's not so easy to, kind of, it's taken 30, 40 years to build this. It can't be overnight. So we'll still be pretty choice, I would say.
I mean, if we were taxed, say, 45%, 46%, same as Vietnam, then we're in trouble.
Probably, yeah.
But if the whole world's been taxed 10%, and we're being taxed 24%, it means it's only 14% more expensive to manufacture the stuff here. Yeah. And I've already invested so much in this ecosystem of supply chains and manufacturing and machines and whatnot that it doesn't make sense to save that 14% by moving my operations somewhere else.
Yeah, correct.
Okay.
Right. Actually, Vietnam is going to be a lot higher, right? Vietnam is, at 50 odd percent. But I think also we're not discounting the fact that, our currency could drop 10%. And that makes it even more attractive, right?
Let's not say that. I plan to go on holiday this year.
But there are avenues because, the world is very complicated. It's not such a straightforward thing, right? Yeah. So I think there are a lot of factors that need to be considered. But I think net, as long as we remain somewhat neutral in this whole trade war thing, which I think is quite hard, Malaysia is quite well positioned in that sense, right? But yeah, so I'm not bearish so much on the fundamentals.
Yeah,
I think the fundamentals are still there, but it's gonna be a lot of volatility as long as Trump is, pulling out spreadsheets and dividing it by 2. Yeah.
Which is why you guys should take our survey, which talks about the sentiment of everyday Malaysians in terms of investing. Because this year, more than ever before, we believe that it's important to manage your emotions when you're investing, right? Yeah. So click the link here. Effectively, it will be here in the video.
And also, I think stocks are like ridiculously,
This is the 11-11 of buying stocks right now.
Yeah. 4-4 or 5. Right?
The only problem is it's not 24 hours that you have to buy it.
Yeah.
This price range might last,
I don't know,
a little bit longer.
Yeah, it might.
Foreseeably. But talking about that, so one of the difficult things about these kind of things is that it throws the world into chaos, and yet at some point in time, things might get pulled back, right? So you sent us a video yesterday that said, maybe he might not even go through with this at the end of the day. So he released the tariff information, but has it taken effect already?
Tomorrow.
It takes effect tomorrow.
Tomorrow.
Okay.
Midnight. Yeah, tonight, I guess.
Is there a chance that he might still pull it back?
He can always do that.
Just sign another executive order.
Yeah, and I think he's getting a bit of pushback from his own party as well, so we're seeing some cracks.
Yeah.
Of course, I think last week, or a couple of days ago, they had a vote for Supreme Court judge.
Yeah.
Then there was Democrat and there was Republican, and the Democrats won in a Republican state.
Right.
So I think. I mean, Trump is great, right, at the PR because he's kind of convinced everyone to vote for him, and essentially he's just increased taxes significantly, and people are still supporting him. But of course, I think the average American is definitely going to feel the pinch.
Yeah.
Of course, there are other things or reasons why they're circulating that because a lot of U.S. debt needs to be refinanced by June. And the U.S. government federal debt is sitting at about 9 trillion.
Yeah.
So of that, 7 of the 9 needs to be refinanced by June. And he's trying to push the hand of the Federal Reserve to actually lower interest rates, right?
That's the last thing they need right now because they actually need more money.
So if they lower interest rates, essentially they refinance at a lower rate.
Yeah.
So therefore, because they're paying almost close to $1 trillion in interest payments a year.
Right.
So if they can reduce that, raise taxes, right? Essentially what they're trying to do is have a bit more of a balanced budget.
Okay.
So So one of them is cutting costs on the federal level, which is what Elon Musk is doing.
Yeah.
And then raising revenue, which is what the tariffs will bring.
Kind of handling it like a company, like, really.
Yeah, pretty much cutting costs, increasing revenue.
Yeah.
And I guess he's trying to push the hand of the Federal Reserve Board to lower interest rates so that his loans could be refinanced, therefore reducing costs as well.
Yeah.
So that they run a smaller deficit over time.
Right.
Yeah.
So right now, the chances of these tariffs actually being pulled back is decent. I mean, Canada got pulled back, right? Some of it, at least.
No, I think a lot of the Canadian and Mexican tariffs are in force. I believe so.
Oh, okay.
Yeah, but I think this was just Senate to pass through. But it's still got to go to Congress, right? So we're not sure how that's going to play out because it's very much political at this stage.
And the world waits while this all is playing out, lah.
Yeah, it's crazy, right? What it's doing. But seeing that it was done quite haphazardly, this tariff thing, I think there wasn't much thought put into it.
Yeah.
So definitely adjustments will happen along the way. I think that's almost guaranteed that will happen.
When it filters down into the system, when people are actually implementing it, it might not be as easy to...
It won't be because, I mean...
They'll have to make allowances.
Their automakers are going to be hit first, right?
Yeah.
Because they import parts overseas.
And so you can't sell a factory overnight either, right?
You can't.
So if suddenly all my stock is getting more expensive, I'm going to have to pass that on to the consumer first.
Correct. Either you absorb it or pass it on to the consumer.
So let's say, I'm Ford or whatever, and I have, 50% of my operations being manufactured overseas. Okay, fine. Yeah, Trump says raise tariffs and whatever. Okay, let me move my operations back. But I can't sell a factory tomorrow.
You can't.
I have to set it up over a year or maybe 6 months, or whatever,
years,
right? So in that interim, no choice. Either don't buy a car or buy it at the high price.
Correct. You will have to buy. So, and that would dampen demand.
Yeah.
Right. And once demand drops, it affects every single industry. It affects the whole world, right? Because, like you said, US is the largest consumer in the world today.
So, last question for this podcast: are we heading into a recession?
We maybe might see a technical recession. We might. Because demand has dropped, right?
Globally or just the US?
Well, once it hits the US, then it might affect the whole
Historically,
world as well.
it does.
It does. Historically, it has. Well, not all the time, but because don't forget, I think 40 years ago, 50 years ago, the US was 30% of global GDP, or close to 40%, right? And G7 was, 50, 60% of global GDP. Today, the US GDP is 11% of global GDP. So I think the impact won't be as crazy as, what happened before World War One and two. But there will still be effects. But we have to remember, right? Actually, all this is man-made.
Yeah.
So, it's almost at a switch of button. If tomorrow Trump says, let's forget the tariffs and lower interest rates and, print more money, everything comes back up. Everything comes back up, right? So as easily as the button can be pushed down, it can be pushed up. So it's very much dependent on what's going on, or what his plan is, if there is a plan. I don't know.
I think that's the biggest question of all, right? Yeah. If there actually is a plan. Okay, so thanks so much for joining us for this special edition.
Yeah, so I think maybe my last comment is just kind of stay safe, stick to your fundamentals, don't overreact, don't manage that emotion. It's every time we get something like this, right? It's always feels like Chicken Little says the sky is falling.
Yeah.
But we've been through so many of these major shifts, right? That the world just continues to move on.
Yeah.
So just gotta look much longer term than this. Yeah.
Yeah.
So don't panic, right? Okay. That's all we have for today's session. Thank you for joining us. We hope this session gave you guys more insights. Please post comments if you have any. And till the next session, stay safe and thank you for watching Borak Bursa.
Bye.
Bye.